Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Yellow Tunnel and Tradespoon. And today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions, Tradespoon tools, trading psychology at Yellow Tunnel, and any questions you might have about your subscription. So I encourage you to type in your question, and I will try to get to all of the questions, and that's the goal for today, to make sure that if you had questions before, I get a chance to answer them. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from its inception through 2007. Options Express was an online broker-dealer acquired by Charles Schwab in 2011. At some point, the company was worth over $2 billion. I'm proud of that experience. Since I left Options Express, I started Tradespoon in 2012, started Yellow Tunnel a year ago. I want to take this opportunity to say thank you to all the Tradespoon in Yellow Tunnel subscribers. Because of you, I'm able to do what I enjoy professionally, trading and managing my own money. I've been doing it for over 15 years, mentoring and teaching Tradespoon subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in technology and science. Please take a look at the disclosures. Trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past performance. And you can see the relationship between Tradespoon and Trading Block on the bottom of your screen. All right, so let's talk about trading. Before we get to a trading system, trading plan, let's talk about current market conditions. So let's look at the spiders. Let's switch to a daily chart. So we can see market is trying to break through the 200-day moving average, 300 on SPY. Continue to make higher highs, higher lows. At this point, it's losing the momentum. Market is overbought, and any negative news can potentially trade the market to the downside. So from my perspective, I think market will break through the 200-day moving average. It can happen next week. It can happen 2 weeks from now. But by sometime in June or end of May, market can break the 200 level and probably, I would say, trade at 310 level. So short term, as the market approaches 310 level, I would look at the risk versus reward. At this point, I think the best case scenario for the next couple of months, as we approach in the next earnings, it's 310. We're about 15 points away from the 310 level. Let me see if I can make this a bit wider, bigger. Right, so the best case scenario, we will retest the April first week of March high. Right, that's the first week of March, the first rebound, which is around 310, 313 level. So to the upside, about 20 points to the upside. To the downside, I think if the market does break the 290 level, like we had last week, it will potentially retest 275 level, maybe overshoot to the 272 level. So there's 12 points to the downside, 16 points to the upside. As the market approaches 310, I would consider, I'm personally going to hedge more aggressively, because I think that's going to be the overhead resistance. If the market does trade at 275 or 272 level, I would be more aggressive in buying. Right now, I think we're in the middle of the range, and the market, depending on info news, can break the 300-day moving average or break to the downside. Market has been resilient to negative news. We have negative headlines from China in terms of additional tariffs that can be imposed on China, or that some of the Chinese companies can be delisted from U.S. exchanges. Despite all of those negative headlines, market unemployment numbers, despite the negative headlines, market has been very resilient to the negative news. So that means that we are continue to be in the bull market. Market is up about 33% from the recent lows. This is a bull market where in every bull market you can expect 5 to 10% correction on the negative news. Very important to look at some of the things that I'm watching are junk bonds. There are definitely some companies that will default. So right now, junk bonds is actually retracing and retesting recent highs. Last week we retested the 96 level on junk bonds. I think that's the line in the sand. As long as the junk bonds are about 96 level, that means there is still demand for the companies that have C rating or B ratings are able to go to the public markets and raise cash, which is very important. And as long as that's the case, I think the market will continue to go higher. And so I would keep an eye on junk bonds. Treasury market is important. So far, the pattern is lower highs, lower lows, trading in a well-defined range, which is good. I think the path of least resistance is for treasuries to continue going lower, but low interest rates are here to stay for a long period of time. So as long as the treasury market is stable, that's good for the bulls. And another important pattern is currency market. Dollar also has been trading in a well-defined range, kind of in this symmetrical triangle for the past few months. I think the path of least resistance for the US dollar is to continue going lower, but as long as it's trading in this well-defined range, I think that's also positive for the bulls. Small cap stocks are outperforming the market, recently retesting the new highs. I would watch this level. The sectors that were leading the market, semiconductors, broke out of this range, right? This is again March 6th, the first rally, very important. Level of overhead resistance staying above 200-day moving average. So semiconductors are leading the market, technology in general, QQQs are in general. Similar price pattern broke through March 6 rebound, staying above 200-day moving average, close to the 52-week high. So technologies, semiconductors leading the market, biotech, 52-week high, small cap biotech, large cap biotech are similar price pattern, all-time high above 200-day moving average. Trading in consolidation phase for 2 weeks. It's kind of probably going to trade in the range and before making another leg higher. Healthcare sector, same thing, trading at close to 52-week high in consolidation phase. Some of the sectors that are lagging, financial sectors. Financial sector is not benefiting from the low interest environment, trading in the narrow range, underperforming general market. Industrials sector, similar price pattern to the industrial sector, similar pattern to the financial sector, and transportation sector. Let me find the transportation sector. IYT, transportation sector, similar to industrials, trading, making higher highs, higher lows, facing the overhead resistance, but still quite away from the March 6 rebound. So that's my view on the market. Let me see if there's any questions. Good morning, JT. All right. So how do you trade in current market conditions? Very important. VIX. Forgot to mention VIX. VIX continues to make lower highs, lower lows. So definitely market is less anxious in terms of volatility. We're approaching 20 level, which is a historic average. So VIX continues to go lower. How do you trade in current market conditions when the VIX is still above the average, historical average? Yellow tunnel for those of you who are Yellow Tunnel subscribers, again, Tradespoon, the idea behind Tradespoon was building statistical models that based on neural networks. All of the models are working on neural networks, artificial intelligence that's trying to adjust to current market conditions and volatility and make predictions in the market, short term and long term. Yellow Tunnel, the idea was that when the market sells off and VIX jumps from 10 to 80, more important is trading psychology than the statistical analysis, right? Because statistical analysis works on the conditions that it can learn on, and when the market sells off 33% in short period in 4 weeks, which it has never done historically, then there's no historical patterns or data where the model can learn on. So human trading psychology becomes more important, how well you trade in the current market uncertainty. So that's the idea behind Yellow Tunnel. We have Dr. Maneker, who joins once a month, last Wednesday of every month. We're talking about how to deal with your inner and outer market, right? Dr. Maneker always talks about there's outer market, news from China, news about unemployment, earnings conditions. That's the outer market. The inner market is how do you react to these news? Based on the research, with the same empirical data, same information, depending on how you feel and what your emotional state, you might make different trading decisions. So it's important to be self-aware. It's important to be grounded. It's important to, before the market opens, to have a routine that not only shows you support and resistance levels that you're trading, but what are the underlying emotions and feelings that you're experiencing. Did you get enough sleep? Do you feel anxious? Do you have fear of missing out, fear of regret? Do you have recency bias? Do you have confirmation bias? All of these emotions are very important. And at that point, trading becomes very similar to the analysis is to a poker game, right? Poker game, Texas Hold'em, very important to know odds, probabilities, and statistics, but it's a combination of science and art. It's also important to understand human psychology and the pattern why people trade the certain ways. Trading I think, is very similar in that regard. It's important to understand trading psychology of market participants and what institutional funds, what are the hedge funds think, what are the pension funds think, and try to predict their moves. So that's the Yellow Tunnel. Free site, there is a blog. You can find the blog, Trading Concepts, Power Trading. That's Dr. Maneker blog, Power Trading and Markets. This is more of ETF analysis. This is all free information and market plan. If you want to learn about our view on recency bias, confirmation bias, or black swan events, then I encourage you, traders decision market process, I encourage you to review these videos. What is the green line represents? This is I'm looking at the Bollinger Bands. So here the Bollinger Bands basically shows you 2 standard deviation move. And if the market is overbought or oversold. Green line is 50-day moving average, and this is historical 2 standard deviation move based on the 50-day moving average. It shows you, so it's Bollinger Band. Ricardo, thank you for that question. All right, so how do you trade? So we talk about trading psychology. It's very important to have a trading plan, right? Dr. Maneker talks about, and in general, all the traders talk about, you have to, first step in any successful trading, from my point of view, from my experience, you do have to have a trading plan, and it has to be written down. In the trading plan, I usually write down how much. My first rule is how much cash do I have in my account? On average, 30% of the portfolio should be in cash. That's probably the most important rule. That is something we can control, right? Going back to trading psychology, we cannot control when the market will break through 200-day moving average. It doesn't matter how much research you have and how much statistical analysis or fundamental, or how long you've been trading. Nobody can tell you on which day market will break 200-day moving average. It can happen today, it can happen 5 days from now, but you can assign probability, right? You can have a view on the market. You can say, I think market will break 200-day moving average based on my software, based on statistical research. It will do it in the next couple of weeks, right? But and maybe it's a 70% probability event, but there's nothing that's 100% certainty. So, but what is complete, what you can control is unequivocally is how much cash do I have in the account. I don't have to guess. I don't have to run the models. I can just look at my brokerage statement and just say, I should have 30% of on average, I should have 30% of my portfolio in cash. This is something that I can have control over. The second rule in a trading plan, to me, is the most important after cash, is portfolio drawdown, right? Your portfolio allocation. Especially if you're new to trading, very important to maintain a large cash positions and not overtrade your accounts. So in my trading plan, before I place any trade and I documented in my trading journal, I always ask myself a question: how many positions do I have, and what is my maximum loss? So if I do day trading, it should be less than 1% of my portfolio. So if I have 1 or 2 trades a day, then I should not lose more than 1 or 2% of my portfolio. If I carry position overnight, I use 5% stop loss when I trade options. So 5% maximum, 5% is the maximum exposure, 50% stop loss. So my maximum loss is 5%. If I have 5 positions, that's 25% maximum loss. If I have 50% stop loss, that's 5 position, 2.5%, that's 12.5% maximum stop loss. So looking at my portfolio drawdown is very important to make sure that if I do want to enter a trade, do I have enough funds, and am I comfortable, or do I understand what my portfolio drawdown can be if, let's say, market sells off? Because I do anticipate that the mentality of selling may go away, and less liquidity, less volume during summer. Any negative news, whether it's unemployment numbers, whether this is next earnings season, at some point there should be a realization phase that the bear's case is that it might take longer for unemployment numbers to go back to historical average. It will take longer for the economies to reopen. It will take longer for people to start flying, despite all of the reopenings of global economies. So at some point, that realization phase, that it will take, potentially more than 2 quarters, maybe it will take 3 quarters, maybe it will take 4 quarters. At some point, that can put a pause in the bull market, in the current bull market. And the market can sell off 10 to 15%. So if and when that happens, right? It's not the question of if, when will it happen, right? It could happen this summer, maybe it can happen fall, maybe it can happen next year. Nobody knows for sure. But when it happens, you need to be always aware of your portfolio drawdown and fear of future regret, making sure that when it does happen, and usually it's some unknown event, what is your portfolio drawdown, right? That's something I can control. So looking at number of positions and the maximum exposure is the second most important rule in my trading plan. The third rule is structure your trade based on favorable risk versus reward, right? We've talked about for spiders, overhead resistance at 300. You can have a view that we will break 300 level, or you can have a view that we will not break 300 level and market is overbought. So you can structure your trade. Maybe you short market, or you hedge market at 300 level, or you hedge market at 310 or 310 level with clearly defined stop orders. Because you trading based on the support and resistance levels. So position entry and position exit are very important to making sure that you have a very well-defined support resistance. Right now, long-term 300, 310 level, I would consider hedging your portfolio. If it reaches 275, 280, I would consider adding to your positions. Short term for day trading, maybe 290 is a support, right, on SPY, and 300 is overhead resistance for short term. So managing your position entry based on clearly defined support and resistance levels based on probability of success, right? When the market is if I look at the market, if the market for long-term traders, if the market is at 293, right, it's a 50-50 chance, right? Market can quickly jump to 305, 10 points up, or it can quickly jump to 10 points down to 283. There's no well-defined support and resistance for long-term trading. But better odds is to buy at 278 or 280 or sell at 300, 310. So you can structure your trade that you don't trade where there's a 50% retracement or we're trading in the middle of the range, but you trade at the extremes, right? When the market is oversold to 272 to 78, that's when the market is oversold, or you short at 300, 310. So that's the third rule of successful trading, is to have clearly defined position entry, position exit. You can we have tools at Tradespoon. You can always go to, let's say, Yellow Tunnel, right? If I go back to aggressive portfolio trader for today, model predicted that support is at 290, overhead resistance is 296. So if the market reaches 296 for day traders, I would go short. If the market reaches 290, 291 level, I would go long, right? Those are the key support and resistance levels. So they're well defined, and we can use them for day trading or for longer term trading. And so those are the main rules: cash portfolio drawdown, trade based on return on capital and probability of success, right? You can look at the historical data, you can look at the Bollinger Band, statistical analysis, historical, or you can look at the implied volatility at options data, or you can look at the neural networks that can tell you what are the probability of success versus return on capital for the stock, for the trade, right? At Tradespoon, every signal that we provide, we assign probability of success, right? So if you trade in spiders, you can see that our model shows that there is a 67% probability that if the spider reaches 290, it will close above that level. And there is 67% probability if the spider reaches 296, it will close below that level. Same thing with the seasonal chart. If you look at the seasonal chart, the model, based on the backtest and based on the neural networks, it looks at the confidence level. How confident is the model that the stock market is going to be higher? So right now, out of 4 predictions that were ran on Sunday at 6 p.m., 3 out of 4 shows higher. So then you look at the accuracy, and in the past, model has been correct about 80% of the time. So if you see 3 or 4 predictions to the upside, then there is 78% probability that in the next 50 days, the average price of spiders will be higher than it was this Sunday. So if you're an option trader or if you're a stock trader, then you know that the trend is to the upside based on the current market volatility. And you can see it sees that overhead resistance is at 311 and support is at 275 based on the model. So every time we trade, every time there is a signal, we assign probability of success. And based on that probability of success, you can determine what the return on capital. Usually higher probability of success means smaller return on capital, not usually, but always. And higher return on capital means lower probability of success. So probability for profit on stock forecast toolbox. This is based on our neural networks and based on every time there is a signal, we store it in a database. So then we go back since we started even before 2012. So we go back for the past 10 years and we say every time spiders had 3 out of 4 predictions higher based on the model, what is the accuracy level and what is the confidence level of the model that the signal is correct. And that's where we get in these numbers. So if you ever done neural networks, or you use the R script, or if you use MATLAB, then you know that these statistical packages give you certain confidence level based on the signal. So all of our models give us this confidence level, and actually we have performance, right? So we have performance of live trading room, we have performance of robo-investor and live trading room based on actual trades. These are not hypothetical backtest or confidence level. This is actual trades as a result of the models. We've been accurate 75% of the time in the past 4 years across all the models. Thomas, if you do swing trade, what chart time interval do you use for entries? Swing trading, I mean, again, depend. We have 5 days model, we have 30 days model. I do look at 45-minute chart, and I look at daily chart if I'm holding position for a couple days or a couple weeks. So usually I would go 1 day chart, and then I switch to 45 minutes, and then 45 minutes just gives me a little bit more clarity in terms of where the support and resistance levels are. Right, last time we had sell-off, I mean, short-term correction, it was 290 level, right? As soon as the market broke 290, it retested to 76. So that's how I find, 290 level. And I also look at the stock forecast, confirm with the stock forecast toolbox. This is a 10-day prediction, so it's based on each candlestick is 1 day. So based on the model, it's also doing a good job predicting support and resistance. It shows 290 level. So if today or tomorrow, Monday, market drops below 290 level, then I know below what the model is predicting, then I know that equilibrium is broken between bulls and bears, right? If today, let's say, there's some news and the market drops below 290 on the negative news, then I know the equilibrium between bulls and bears is broken in terms of what the model predicted. So then there's a negative bias in the market. Right now, there's a positive bias in the market, right? So the trend is to the upside. Yes, so signals is for trading, yes. Weekly and monthly model. So right, so how do you trade? So what? Okay, so question was weekly and monthly trade. So Thomas, yes. So in the live trading room environment, so we have different services at Tradespoon. One is access to live portfolio. A lot of our subscribers basically are requesting to have access to every time I trade. So I do have Elite Trading Circle, gives you access to morning bell and closing bell. We have live trading room. Scott and I are managing leading live trading room, and I have trader log. This is a technology that I'm very proud of. There's very few, I don't think there's anybody actually that gives access to live trades as they occur real time. I mean, there are Twitters, there are blogs, there's manual entry, but this is a API that's plugged into my live trading room, and you can see, let's say, KLAC, right? So you can go to Tradespoon. How's actually KLAC? Maybe I should close this trade. That's actually reach 174. Right, so let's say KLAC, right? So you can see KLAC is an active trader. So active trader model, this is a model that's for short-term trading, 1 to 2 days. And you can see KLAC was one of the trade ideas for today, basically saying either short KLAC at 172.43, the previous close price, yes, Thursday close price, or short it at 162.67. So when the stock dropped this morning, I actually did short. I went long 172.5. I sold the option for $2, right? And now it's trading at 80 cents, right? So Elite Circle actually provides you with access to my live portfolio. So these are actual trades. You can see what the strategy. Sometimes I buy call, sometimes I short put spread in this example, or buy stock, and take advantage of the current market volatility. And not only do we provide signals, but some of these signals I trade in a live trading room environment. Or in this case, even if there's no live trading room environment, we give you access to trader's log, real-time access to my portfolio, along with SMS message. And that's philosophy across all of these portfolios. Elite Trading Circle gives you, every time I trade from premium service, or if it's a robo-investor service or live trading room, then you have access via email and SMS message. If you don't have time to watch the market real time and trade during morning or at night, we have other portfolios. Premium portfolio. So premium portfolio is where I trade option spreads. Every week there's a trade idea of the week. So Pepsi was one of the trade idea from last week, and I'm showing that I'm buying an option spread, 125, 130 spread. It gives you a video explaining why I entered this trade, what my view on the market is, and give you choices. You can either buy stock or buy options, or in my case, I did option spread, bought it at 125, sold 130, call spread for Pepsi. So that's premium portfolio. It's great for somebody who's new if you want to learn how to trade options, because we give you access to all of the trades. And we also give you probability of success, estimated move analysis, and return on capital, and what is the expiration of this trade. So that's the premium service. About 4 trades a month, right? 4 new positions a month. If you have a full-time job, or if you're new and you just want to you're looking for 1 or 2 trade ideas a week, then this is a premium portfolio. The next one is robo investor portfolio. So some of our subscribers are not comfortable trading options, so we do have a robo investor portfolio. This is where I trade stocks. Same thing, you get email and SMS message every time I get in or get out of the trade, or I adjust position, and you get newsletter twice a month. So there are also 4 positions a month. So you get 4 new trade ideas a month, about 1 trade idea a week. And that's the robo investor portfolio. So you have robo investor portfolio, you have premium portfolio, and then you have Elite Trading Circle that gives you access to all of our portfolios, including any trades that I do based on active trader, weekly trader, or monthly trader model. Active trader model, we just went over. Example is KLAC. This is meant for short-term trading. I hold a position 1 or 2 days. And these are the entry points that you can consider going long. Sometimes there's a question in terms of KLAC, did it reach 172.43? Let's see, HRB also, but let's say KLAC gapped up and it never reached 172.43. What do we do then? We do provide you standard deviation of error. What is the range where you can consider buying KLAC? And we give you different strategies. If you see pre-market market is down, 2 to 3%, then I would execute strategy A, basically waiting for the previous session predicted low based on the stock forecast toolbox, right? That's the predicted low. If you see that the market is flat or up, then I would consider doing entry at the previous day's close. I usually don't chase the stock if it gaps up, and that would be the strategy. So that's active trader, 1 or 2 days, right? Thomas had a question, what about weekly trader? So weekly trader, we have a weekly trader model this Friday. Let's see, what was the published? MasterCard, right? So MasterCard was published on May 18th. And again, same thing, you have a choice. Either you buy at 268, the predicted low based on the model, or you buy it at previous session close. So in this example, let's see, the signal was published on May 18th. So on May 18th, on Monday, if you waited for 268, it will never happen, right? So if you bought it at 277, which I'm not sure if it opened at that price or not, you also might not enter the trade. So then it becomes your choice, right? For weekly trader, you might just buy on Monday and be consistent. The signal comes out on Monday and you just buy it on Monday, and then today you would be up 3 to 4% on MasterCard. Or you wait for predicted low because market is volatile and prone for corrections. So, and in this example, again, you would not enter the trade. So this is where probability of success and return on capital, this is, I think, is a good example of probability of success and return on capital, right? Because if you wait for 268, right, then your probability of success will increase, right? It will go higher because you buy the stock at the discount. It might not or might not reach that level, but you are buying the stock at the higher discount, and your probability of success will go up, right? But your return on capital will go down, right? If you seek for trades with high probability of success, your return on capital will decrease. So that becomes more of how aggressive, where you are as a trader in terms of risk taking, right? In terms of uncertainty, Dr. Maneker, we had a webinar where he was talking about that fear drives our decisions, right? It gives us energy, right? So it just depends on this and where you are on the spectrum of risk taking, right? When you look at the spectrum of risk taking and how much fear drives your decision, different people would make different decisions, right? And actually, throughout our life, we are becoming, well, at least somewhat, like in my case, I've become more risk averse. So that's where you just have to, I don't think there is a right or wrong decision. This is just something what you're comfortable with. Do you want to always wait for predicted low and trade less often, have higher probability of success, maybe less smaller return on capital? Or are you more of a risk taker and you want to always trade either on the open price or on previous session close price, and you're fear, the risk taking, the fear drives your decisions. So Yellow Tunnels started about a year ago. I'm a founder of both companies. Again, Yellow Tunnel is trading psychology. So the whole, if in Tradespoon, when you come to Tradespoon first time, we're talking about models. We talk about statistical analysis. We talk about probability of success, how often we're correct. That's the main driver decision. When you come to Yellow Tunnel, the first thing you learn is about trading psychology, how important it is to be self-grounded, how important it is to be self-aware. We meditate, we do breathing exercise in a live trading environment. So trading is a journey, right? Dr. Maneker always talks about trading is a journey. And on the way of the journey, traders go through different stages, right? Dr. Maneker talks about different 4 stages. And the highest level, the stage of the growth of the trader, just like any other profession, whether you're a chess player or you're, you paint or you write poems or novels, you will go through different growth stages. And the last stage of any skill that you acquire is usually you reach this free floating mind, right? There's an analytical mind, there's a free floating mind. So when you do certain tasks in the free floating mind, that takes time, that takes practice, and that takes kind of this journey. And it's not something you can do overnight. It takes time, it takes practice, but it's important to at least realize that there's different stages of learning or growth that you will have to undertake. So the purpose of Yellow Tunnel is to A, make you aware of these stages, and B, help you on that journey. So thank you for the question. That's the purpose of Yellow Tunnel. Why is the 20-day prediction wild, even though it shows higher? 20-day predictions, we're talking about seasonal chart, I assume. Let's see. I believe the question was, why is this line is white? So again, this is going back to red is that it's lower, higher, it's green, it's higher, and this white, it's still higher, but there is less confidence level, right? So that's the only reason it's in white, right? It's not at 100%, it's not at 78%, it's not at 100% confidence. So this is white. So just how confident the model in that specific prediction for the next 20 days. Good question. How do you estimate accuracy of the system with such high volatility of the market? That is a good, excellent question. These numbers are driven by going back for the past 20 years when the signal occur. It is true when volatility jumps, right? That's kind of why I started this conversation. The accuracy does change. And this is a very good question. The accuracy, it is important to realize that any statistical analysis will change because the accuracy based on the volatility. So when volatility jumps to 80, then just because the model was accurate 75% of the time before, that doesn't mean it's going to be 75% accurate when the VIX is 80. And that's absolutely true. Once the VIX drops, then the models are, it is relevant that 80% accuracy, but it's absolutely true. When VIX was at 70, 60, then the accuracy is a lot changes. And you can actually see that with the stock forecast toolbox. Before March sell-off, spiders was actually, the accuracy was A, right? The model grade is not permanent. It changes every week as we rerun our accuracy on analysis. So in February it was A, it dropped to C in March and April, and now it went back to B. Because it is true when the VIX rises, then the accuracy changes dramatically, especially when VIX is at 60, 70 level. The good news, VIX at 70, 80 level only once a decade or once every 20 years. But VIX does jump to 30, 40 level, lately almost a couple times a year, we see VIX at 30, 40 level. So it is important to realize that the VIX jumps from 10 to 30, it will take a model few days to adjust. And when the model says it's 70% accurate, well, it was 70% accurate when VIX was 20. You should ask if the VIX is at 40 and it only happened in the past 2 days, then you should question any statistical analysis. Doesn't matter who provides it, how accurate it is when the VIX is at 40. But great question. Spiders for weeklies. I would use stock forecast toolbox. If you're looking for spiders for weeklies, I would look at the short-term prediction. I would look at support and resistance level, right? 290, 296, and I would look in the next 10 days. The model shows you that in the next 10 days, market can reach 304, I would go short, or market can reach 290, 292, and I would consider going long if your time horizon is 1 to 5 days, right? If you're trading weekly options. So right now, if I'm trading weekly options and I'm looking at the next week, if the market reaches 290, 292, I would be long. If the market reaches 304, I would be short. Chris, thank you for your question. Yes, Chris had a good question, comment about the performance. 75% accuracy of the actual trades, long-term trades, right? We're talking about combination of short and long-term trades. If you talk to any hedge fund managers or any quant, to provide a signal, for the next 5 days, for the next 30 days, with 75% accuracy is very good. So thank you for that comment, and I'm actually pretty proud of that accuracy as well. I think we have a great team of financial engineers who have PhD in physics, mathematics, teaching in major universities, and they've done there's a lot of research on neural networks and predictive analytics, and I think we're doing a good job in that field. JT, so we have different levels of membership, right? So we have premium membership. Premium membership does not include, so the question why is premium membership doesn't include everything. The SMS message, the access to the live portfolio, this is something we've developed in the past year. So the weekly trader and the access to traders log, this is only part of the premium elite membership. This is not part of premium membership. And as we invest money and research in different areas, then your existing membership might or might not include that. Thank you for that question. Faye, usually I do trade option spreads. So an example of KLAC, the only reason it's short put right now is because this is more of a stock replacement and this is a day trading, right? So I'm planning to close this position by end of the day, right? By end of the day, my goal is to close this position. But if like Nike, if I'm carrying position overnight, then I always trade spreads. The idea is that I never want to short puts or calls if I carry position overnight, because you don't know what the risk is. KLAC, I know what my risk is. I know that KLAC is not gonna, it could, hypothetically it can, but risk is small. That by the end of the day, KLAC is gonna, trade outside of, 1 or 2 standard deviation move. I know what is 1 or 2 standard deviation move of KLAC, so I know that it will probably not drop below, once this level. But if I carry position overnight, it might jump, or drop 2, 4, 5%. So for short-term trading, sometimes I do sell short put, take advantage of the spike in volatility, but for long-term trade, I always trade spreads. If you don't trade options, Joseph, which one is the best? If you don't trade options, again, active trader, monthly trader, and weekly, the question is, what is your time horizon, right? As a trader, you need to have a time horizon for your part of your trading plan. How long, my question is, how long do you usually hold your position? So if you do day trading and you only trade in stock, I would recommend using active trader. If you're a swing trader, you hold in a position 1 or 2 weeks, I would recommend weekly trader, because that's what the model is trying to estimate and predict. If you hold in position 30 days, 50 days, then I would go with the monthly trader, right? And so long-term trading, robo-investor portfolio is probably the best, right? This is where I hold the position for 1 month, for a few months, maybe for a few quarters, because I don't have to be correct on the timing, right? I just have to be correct on the direction of the stock. I don't have Autobots, Paulo, for Chris. Thank you for your comment, for your service to the country, and thank you for your kind words. Jay, okay, thank you for your feedback. Paulo, hello. JT, how do you choose the best strike price? So the strike price for spreads, usual consensus is 30% the width of the strikes, right? So your maximum gain. So in an example of Nike, I bought a $5 spread, 80-85 call spread for $3, right? So my maximum gain is $1.90. So $1.50, $1.80. This is the maximum gain is 30% the width of the strikes. So that's usually what you would do. If you do single options like long option, usually delta 75, delta 85, right? The higher the delta, the less premium extrinsic value. So when I trade options, I always want to minimize the extrinsic value. The downside of that strategy is that, again, I'm improving my probability of success, but I'm sacrificing return on capital. So another school of thought is buying out of the money option, right? Where you have only extrinsic value, but then you increasing your return on capital potential, but you decreasing on probability of success. So if you strictly trading based on probability, if you want higher probability of success, then you buying long options with the delta 70, delta 80, right? Delta 90. You want to minimize the extrinsic value. If you're looking for home runs, then you would buy out of the money options with the idea that you want to maximize the return on capital, and that's okay. That's also a sound strategy, but just realize you're not going to be 75% accurate. Most of the time when you buy out, 90% of the time when you buy out of the money options, the trade goes against you, right? So which is okay. You just need to make sure that 10% when it does go in your direction, you make more money than 90% when it goes against you. Right, Jace, thank you for your comments and appreciate it. Pilo IVR. Let's see. Haven't traded IVR. Real estate investment fund. Is this the right stock, IVR? So it pays dividend yield 71%. I'll be careful with dividend yields of 71%, but and $2 stock. I don't know what it is, but it looks pretty bad. So I don't know. I just don't know how. So I would look at into their balance sheet, and I would look at in their S1 filings and just see how solvent they are. Right? They went from 16 to 2. So usually when it's high dividend yield and stock went from 16 to $2, the question is how solvent that mortgage capital is, and I don't know. In general, financial REITs historically outperform the market. Right? If you buy, BlackRocks of the world and solid financial REITs company, they will outperform the market long term. So VNQ, Vanguard Index Funds pays 4.5% dividend, right? You can sell options against it, and you can, it will outperform the market. Short term, obviously, a lot of tenants are not paying their mortgages, they're not paying their rents, and financial REITs will be, the spreads will be higher, and there'll be a lot of distress. So buying ETFs, I think, is the better way to go, because you don't know which companies will stay in business and which companies will go out of business. But if you have long-term perspective and you want 4, 5, 7% yield, you buy financial REITs, you sell cover calls against them, and you have, for income generation, I think this is a good strategy. Especially if you don't think we're going to have a prolonged recession, right? If you think this is 2 to 3 quarters, and then people are going to start paying their rents, and government is buying the distressed debt and mortgage-backed securities, then long-term investors, I think, will benefit from the financial REITs like VNQ. Yeah, Jay, if you want to open up a support ticket and just let us know. I mean, I honestly I don't know. I only see that it's letter J. I don't know your history. I don't know membership, anything. So just open up a support ticket and let us know if you have any questions, if you're looking for upgrade, or if you want to be something included. Just open up a support ticket, and I appreciate that. If the dividend is too good to be true, it's good. It is good to be true. Risky. Thomas, I agree. I would be careful every time something pays 50% dividend, 20% dividend. There is no, what's the expression? No free lunch. That means there is a high risk. The next question becomes, what is the balance sheet? What is the debt obligation? And how long can the company pay that debt, right? That's what you hear on the news for Boeing, Delta Airline, Marriott Hotel. If people don't travel, if people don't fly, company XYZ can pay their debt 3 months, 4 months. After that, they have to go through bankruptcy, right? Either government has to bail them out, or they have to raise money that's why junk bonds are so important. But I would look at the debt and how long do they have cash to pay that debt, and how easy can they go to and raise the money. So that's the question. If you're not don't have accounting background and you're not comfortable doing that for individual companies taking that risk, then go into well-known liquid ETFs. Osama, I'm low on XLU. This was just recent trade. I think utilities, we've talked about this for the past couple of months. I think short-term yields are oversold, utilities, and I think it will continue going higher. 50, 52, I think is the low, right? So right now there is maybe $3 to the downside, but by September, I think 65 is reasonable to assume that a utility will be at 65 by September. So if it's a long-term investor, right now, the way I see it, it's $10 to the upside, $3 to the downside. I like that risk versus reward. Plus, again, pays you 3.5% dividend, and if you sell cover calls, you can get 5-6% return. Chris, spot gold. What spot are we talking about? Gold. Gold, I think this is an environment, where gold and GDX are going to continue to go higher. I think short term they're overbought, right? But I would buy into pullbacks. GDX. I mean, you can see it, but 32, 30. Anytime it gets close to 50-day moving average, I think it's a great buying opportunity. Short term, I think it's overbought. You can see it's losing momentum. Robert, thank you for your questions. JT, thank you. Asama, thanks. Chris, Spotify, the company Spotify. Well, they have this deal with the Rogan show, right? Which I love listening to podcasts. But it's overbought. So I would, I personally don't chase stocks. So I mean, it can go to 300. I don't know, but I would probably be a buyer at 160. But this time, it's already had the news, right? Is buy it on a rumor, sell it on the news, but it's overextended. Yeah, I love listening to his podcast, but it's hard to ascertain how much revenue is going to bring, especially with Apple. A lot of are in that. It's pretty competitive field. All right, 11:33. I think I answered all the questions. What is SILJ? You guys trade a lot more stocks than I do. Juniors, any type of leverage ETFs. You can hear on CNBC, these these exotic ETFs. I'm an option trader, so I just know that leveraged ETFs, they're very dangerous. Because the way they're priced, mark to market, right? They do have this exaggerated effect, right? 1 to 2, 3 times move, and you can achieve that with options, or you just buy more stocks. So, I have a good opinion on silver. I think silver is a good time to buy, but any leveraged ETFs, buy options, buy more stock. But leverage ETF, we've seen that with USO, right? And you need to know what it consists of. And leveraged ETFs, not only they're leveraged, but they also consist of futures and options. And a lot of them go out of business, right? We've seen it when there was a crash in volatility a couple of years ago. Now with energy. I don't know if the silver is going to follow, but I'm not the right person to ask about leveraged ETFs. I don't trade them. I think they're dangerous, especially for new traders. This is more of a fear of missing out, right? You think for $1 move, it'll move $3, so it's great. But when on the downside, $1 move, it moves a lot faster to the downside. So silver is great, energy is great, but the leveraged ETFs, I would stay away from them. Diego, Bollinger Bands here is the 2 standard deviation move, right? 50 days. So I'm using 50-day moving average and 2 standard deviations for the upper and lower Bollinger Bands. For index ETFs, I think this is a good indication of overbought or oversold. I'm long gold and silver. I personally trade ETFs, GLD, SLV, or options, right? If I want to leverage my account, then I would just buy options or option spreads. I don't trade physical gold. I don't trade, leveraged ETFs. That's what I usually do. All right, guys. Thank you very much. Have a great weekend. Enjoy your time with the family. Remember Yellow Tunnel. Trading is a journey. You want to review these webinars and short videos. You want to get into this free floating mind. It takes time. It takes practice. It means that you need to have a trading plan. That's the first step. The second step is to have a trading journal. In a live trading room environment, you will see I always talk about, it's great to have a trading plan and have these webinars, but when market moves and volatility moves, very important to have a trading journal and grade yourself. Whatever you planned, usually, I speak from my personal experience, sometimes I deviate from my trading plan. So trading journal is an opportunity to see if there's a gap between what you were planning to do and what you're actually doing. And you want to close that gap as time goes on. All right, thank you very much and have a great weekend and enjoy your time with your family and be safe. Have a great Memorial Week. Where's Memorial Day weekend? Am I losing my mind? Isn't it next weekend? Or is it this one? Memorial Day. May 25th. You are right, May 25th. So Monday is closed. All right. All right, so yes, enjoy the Memorial Day. Thank you to everyone who served for the country and who's continue to serve for the country, and enjoy your weekend. Spend time with friends and family, recharge, and I will see you guys on either the closing bell today or Tuesday. Thank you very much and have a great day. Oh, Jay Mughal. All right, thank you, Jay Mughal. Robert, Phil, Diego. Yes, all of the sessions always gets recorded. You can find them under live event recordings. Faith, thank you. JJT, have a great weekend. Osama, Bak, Fred, Leon, Trader, Joseph, JJT, Leon, Diego, and everybody else, a lot of people. Thank you very much. Have a great weekend and enjoy your time with your family.